welcome. My name is Snell Cooke with the Credit Union Connection. We're here live from the GAC 2025, and I am sitting with Bob Child. Welcome.
Thank you for having me.
Absolutely. And Bob is the COO at Origence.
Correct.
So give us a little more of your background as well as a little bit about the company, even though most people already know.
Sure. Bob Child, Chief Operating Officer with Origence. I've been here 12 years. Head up corporate strategy and the operations for the company. A little bit about the company. 2024, we processed $53 billion of auto loans across the platform. And that represented just under 40% of all of the auto loans in the credit union industry. So gives you a sense of the scale.
The scale, yeah.
And what's important about that is that this particular platform is basically owned and controlled by credit unions for credit unions. And so that part is also very important from that perspective.
Especially when you're in DC, of the people, by the people, for the people, right?
Absolutely, right.
So, Origence had an interesting announcement at GAC this year called eContracting. Tell us about that in a little more detail.
Yeah, so approximately 98% of all the loans that happen on the CUDL platform today, or credit union loans, are using what is referred to as AutoSmart. And AutoSmart is a small, light version of eContracting, but it doesn't go the full step. What we've recognized is that the large dealer groups are demanding eContracting. Couple reasons. One is it solidifies the contract and the documentations in an electronic vault type document, so that when it goes over, you have all of the final documents for a loan transaction with the expectation that there's no follow-on documents. Why is that important? Is that a credit union or financial institution will not fund an auto loan transaction until all documents are there together. By putting it into an e-contract vault, it's all together in one sealed package with the expectation that you're going to fund right away. Today, credit unions fund by and large through ACH, which is overnight funds.
Sure.
Where it's moving to, especially with the large auto groups, is FedNow.
Right.
FedNow is instantaneous funding, and that's where the large dealer groups are going right now. So it's becoming table stakes that credit unions are going to have to get on board to e-contracting. About 23% of all the auto loans today are on the new side are e-contracted. That number is just going to keep going up higher and higher as we go forward.
And especially FedNow, it's interesting because I'm not sure there are that many, several dozen credit unions on it, and then even of those, a lot of them don't do I can't remember which end, is the receiving end? They
do the receiving, but they don't do the sending.
Yes.
And the big reason for that is if you use an ACH, you can unravel an ACH and bring it back if you did a fat finger or something on it. FedNow, once you push the button, that money is gone.
Yep.
And so you've got to then call back to the receiver and say, please send it back. There is no unraveling.
And there's no obligation to do it. Yes.
Absolutely. And so that's the big reason why credit unions are starting to get comfortable with it.
Right.
Today, Origence works with Tesla. We did $1.5 billion worth of loans for credit unions with Tesla. And we work through Catalyst to do FedNow for all the funding of those loans.
Okay.
So what we've done is, instead of having each credit union be on FedNow, we basically wire funds through Catalyst, who then FedNows it over there. So there is ways to do it.
Yeah. So I know you said the dealers are moving that way, so that's what
Dealers
we got to do.
are moving that way, yes.
But why else is this important?
Well, for the credit union's perspective, you've got the original document. So if any credit union is doing a securitization, if they're doing a participation, they have to have it all together in basically a bundled original document set. So that's the other reason on a credit union side is that when your auditors come in, or if you're looking to participate or securitize, you've got all of the documents in a nice,
it's got to
clean
save a lot of time.
Absolutely. And it's all electronic and digital, so you're not looking for folders and
Digging through
papers
file
and trying to
drawers,
find
yeah.
copies of a driver's license, copy of insurance statement, copy of the contract form. It's all there together in one bundle.
Yeah, which is the way the world's heading. Everything automating and
Absolutely.
putting it together in the same place, fortunately.
Correct.
And so, why is it important now more than ever, though, that credit unions move toward this, just gain efficiencies wherever they can? Do you think?
Well, it's important to gain the efficiencies, absolutely, and to have the definitive document so that you don't have an audit issue. But it's also important because if you look back 6 years ago, the large auto groups were only 12% of the dealers. Now they're close to 30% of the dealers. So your AutoNations, your Lithias, your Garfs, they're acquiring more and more of the dealers, and they're now setting the standards. And so if you don't get on board with it, you're going to start to lose auto volumes. That's the other thing. And so those trends are just going to continue, just like we're seeing consolidation in the credit union world, consolidation in the dealer world as well. So yeah.
And so, let's back up a little bit and just talk a little generally about 2025 lending, because I know we thought one thing at the end of last year, and now the world has gone a little bit crazy, or the Washington's gone a little crazy anyway, and that affects everybody.
Yeah, absolutely. We all anticipated an interest rate cut at the fourth quarter of 2024, which did not happen, and then we were predicting 2 to 3 cuts in 2025, which that is not going to happen at this point. As a matter of fact, not only are we not going to get those cuts, but effective today, the Mexico, Canada, China tariffs went into effect, which is going to result in increased car prices.
Right.
So we have a trickle-down effect that's happening right now. The tariffs are going to raise the cost of cars. Interest rates have not moved. And the car dealers are a little bit caught from the perspective that by lowering the price of the cars, you're going to create more negative equity. And we're seeing that right now. So individuals that bought cars in 2021 in COVID, when we were having the chip shortage, were paying above MSRP. Those people are now in the market to get a new car, and the number and percentage of the people who are underwater on those vehicles because the value of the car has declined faster than they've paid down the loan. It's negative equity. Negative equity then turns into lower down payments, which turns into a higher monthly payment on the new car. So you see this dynamic tension, and so what we're going to see in 2025 on the new cars is more subvention programs where the manufacturers are going to work with the captive finance players to reduce the interest rate to the 3% and below. Origence has been working with Tesla and now some big dealer groups to participate also in these subvention programs so that we can take and basically buy down an interest rate. So if the credit union normally would have charged 7.99, we can bring it down to 4% basically by buying down that interest rate. It's good for the consumer, the member, and it also keeps the dealer and the manufacturer whole too. So you either reduce the price of the car or you reduce the interest rate. In this dynamic of this negative equity, all the manufacturers are seeing the best thing to do is to reduce the interest rate right now. So we're also seeing then on the used car side that used car prices should decline by about 3% here in 2025, which is a benefit. During 2024, 82% of all credit union loans were used cars. that's much greater. So typically in an average year, credit unions do about 76% of their portfolio in used, with the difference in new. But you can see as the manufacturers were cementing with their captive finance companies, the credit unions didn't have as much access, and so they went heavier on used. So we saw more. So I anticipate about 82% of credit union loans in 2025 to be used as well. And we do see good margins that are out there between the cost of funds and what they're lending at. It should be a good lending environment.
That's good news.
That is a good news.
Sure.
As long as the credit unions are coming out of funding CECL, they're coming out of difficult loan-to-share ratios. So getting those things behind them, you're going to start to see more wind at their back, and the credit unions will come back into the market.
Fingers crossed.
Fingers crossed, yes. So that was a mouthful.
Well, no, and I appreciate that's all great information for our audience. And so I'm going to give you the last word. What kind of takeaway do you want our credit union audience to bring back with them out of our discussion, or anything else for that matter?
Yeah. So, all right. So I am a baby boomer. I shop for a car at a car dealer, but I also look online. However, Gen Z people start that auto shopping experience online, multiple different auto shopping websites. And what's new now is Gen Z is more uncomfortable with their financial situation. So what does that mean? It means that they're not comfortable going into a car dealer, picking out the car, and then finding out that they are not credit worthy enough to afford that car. That's somewhat embarrassing or uncomfortable. And so what they're seeking is to get that pre-approval online. So at these different auto shopping channels. And so the start of the auto loan is starting more and more frequently online. And so one of the things that we're doing is going to all of the auto shopping sites and getting credit unions basically on those sites so that credit unions can still get those loans before they're shipped off to Wells Fargo or Chase or somebody else. So what I would say is pay attention to that. This is important for your Gen Z millennial members. And then reach out to Origence, get connected so that you can tap in and get those Gen Z members wherever they're shopping.
Right.
So.
And then hold on to them.
And hold on to them, absolutely.
All right. Well, thank you so much. I appreciate it, Bob.
Yeah, all right, a pleasure. Thank you so much.